And our focus is on implementing an ESG strategy, a finance-driven ESG strategy. So I'd like each of you to kind of set us up here. Saurabh, I'm going to start. Actually, you know what? Anne, let me start with you because we're going to start with the for-profit side. You each lead very different organizations. Obviously, Nasdaq is for-profit. Highmark is not for-profit, and it's a health organization that includes insurers and providers and has a presence in all 50 states. So, Anne, when we looked at the Nasdaq, it started down the ESG road many years ago, but the finance department really took over it about a year and a half ago, and it centers on reporting. Can you walk us through what that looks like right now?
Yeah, sure. So about a year and a half, 2 years, a year and a half ago, we started to recognize that we had a lot of people involved in our ESG journey all across the organization. And we asked ourselves, is this the best way for us to think about it and run it? A lot of engaged folks. And so we took a step back. And what we decided to do was not just bring reporting, but to also bring corporate ESG strategy into finance. So we created an organization within finance that is responsible for the strategy and the reporting. And so this organization works with all the different stakeholders across the organization. So whether it's real estate or HR, marketing, you name it. I mean, there's a lot of folks that are involved. We work with them to set our 5-year goals, to measure ourselves along the way, and then also to do all of the reporting that comes along with it. But the most important part of it is setting the strategy and executing.
So where do you think you are in this strategy? If you were to liken it to a baseball game, are you in the first inning? Are you in the fourth inning?
Yeah, so we've made a ton of progress. I think if you ask me, where we were in terms of our ratings and rankings, we've gone from 5 years ago, we were for the top 3, raters and rankers, we were in the bottom quartile. Now we're in the top 5%, across all 3 of them. So we've made a ton of progress by implementing our strategy and also by reporting on it, because that's an important element. But that's not the journey. It's not about the ratings and the rankings. It's about what you want to achieve as a company. So I would say, I don't know, it's hard to say. Third inning. We have goals going out to 2050 related to the environment, and we have a journey ahead of us around diversity and what we want the company to look like. But it takes time. It's not something you can move quickly on.
Right. It's very much a long-term plan. Saurabh, you told me that the social campaign is at the heart of Highmark's mission. You don't even use the acronym ESG because S&G are just embedded in your culture. How does Highmark try to fulfill its objectives then?
That's a great question, Scarlett. Let me first of all start off by saying Highmark Health is about 25 billion blended health organization, not for profit, as you said. And our mission is to drive remarkable health care for all payers and providers in our footprint. And social determinants of health is core of Highmark Health's mission. And what that means is to provide equitable health care to underserved community, to provide health care to people who do not have access to health care. And how do we provide them low-cost care, quality access at the time they need it and where they need it. So that's the mission of Highmark Health. And like you said, it's so ingrained in Highmark's mission and core values that we don't really recognize ESG as an initiator. It's part of second nature of Highmark Health.
It's just what you do.
That's right.
So then can you give us a sense of how much costs tied to ESG or social determinants have gone up over the last couple of years? Because obviously COVID was a moment where your needs and what you offer were put to the test.
Absolutely. COVID was really a test for us, like you said, for any healthcare organization in the country. And for us, we spent almost $1.4 billion in different events in COVID. Vaccination events, we did 60 mass vaccination clinics. We vaccinated more than 400,000 individuals across our footprint. We offered different providers PPE equipment that they couldn't afford otherwise. So it was approximately $1.4 billion spent across Highmark Health, and about 10% increase on a year-over-year basis.
10% increase year over year
Yes.
when inflation is running at 8%.
That's right.
Okay,
Yeah.
it's good to know. And obviously that's the nonprofit look. From a for-profit perspective, from where you sit as the listing venue for 3,700 companies across different industries, I wonder how much any one company's shareholder base influences its ESG strategy. Does it?
Yeah, I'm not sure that one shareholder base is influencing an ESG journey. I think for our companies, in our listed companies, it's really about access to capital. And when you think about, there's a lot of money that sits in passive funds that are linked to ESG metrics, and then there's a lot of investors that are more so in Europe, where 60, almost 70% of investors in Europe have some sort of requirement on the ESG side to screen, to even invest in you. And then in the U.S. that's less, but it's about opening up access to a bigger investor base, and thinking about what's possible as opposed to the existing investor base. There may be some specific instance of it but I think it's more about the bigger picture, longer story.
I ask because a long-term ESG strategy is always going to be secondary for a company that needs to serve its shareholders, that needs to deliver on its annual, quarterly targets, especially in an environment like this one that's only getting more challenging.
Yeah, absolutely, and I do think there's an appreciation for having targets that are or having a journey that takes a long time. Investors do appreciate that. I mean, if you look at some of the science-based target goals, right? Those goals are, like I said before, they're out to 2030, 2050, and so it's not about having achieved them. It's about having them and working towards them, and that's appreciated by the investment community.
Setting them out as benchmarks to reach for.
Yeah, exactly.
Saurabh, you worked at GE, so you understand the for-profit world well. And you were telling me that the main challenge for nonprofits is lack of speed and lack of discipline. Can you explain what you mean by that?
Sure, absolutely. As you said, Scarlett, I spent 17 years in GE, so I have a different perspective, both for-profit.
You know about managing the numbers.
Yes, absolutely. In a for-profit world, we obviously had shareholder pressure. We had the investment community that had defined certain goals and metrics for General Electric, and we were obviously cognizant to those. There's nothing wrong with that, but in the nonprofit world, we could invest long-term capital into strategic goals of Highmark Health, the mission and vision that I talked about, taking care of the community. A couple of things that Highmark invested in. One example is Thrive 18, where we took hold of 2,000 houses in underserved community in Pittsburgh. And we said, let's go after the social determinants of health. And the social determinants of health could be food, could be shelter, could be access to healthcare. And we invested, the numbers that I mentioned earlier, over long term. And we found that by making that investment, we were able to reduce the cost of healthcare in those communities. So in a not-for-profit world, we can make long-term strategic investments without having short-term quarterly financial pressures. And we saw, big outcomes from that.
But at the same time, Highmark also supports ESG through a business investing in healthcare startups as well. Right. So it's not all nonprofit. There is money going towards these small businesses that may eventually become leaders.
That's exactly right. So one part of Highmark is Highmark Ventures. And it's about $150 million fund that we have set aside to provide seed capital to some of the startups, like you said. And some of these startups are meant for providing basic access to healthcare to these underserved communities, or providing healthcare at a lower cost in certain disease states. Diabetes is one example where it's highly prevalent and spreading very fast. Some of the companies are working on how do we provide preventive care so people don't even get diabetes in later stage. And Highmark has invested in these companies so that we can advance that mission. So that's the advantage of having that not-for-profit view of providing access to healthcare.
And you mentioned earlier that the finance department is leading the strategy, implementing the strategy. To what extent does your finance department own ESG responsibilities? Is it something that, at the end of the day, if there's an issue, you are the final arbiter?
Yeah, I mean, we are a very collaborative environment, but at the end of the day, maybe I'd like to think of it, at the end of the day, if there's a mistake, it's my mistake. And so if that's how maybe I'd define ownership. But it's, we have, obviously the corporate strategy and reporting sits in finance, but there's so many people across the organization that are involved in making it successful. So it's a very, it's a very collaborative committee, type approach, but at the end of the day, finance has to make sure it's right.
Yeah, I just wonder about that because I think of ESG as kind of an interdisciplinary major at a college where it doesn't belong to any one department, so as a result, it kind of gets lost sometimes. And
I think we saw that, like, sort of coming into making the decision about bringing it into finance. We saw, that mad rush where you're about to file one of the reports, and you just need to make sure the support is right, and that you have to reach 5 different people to do it, and it's an uneasy feeling. And so I think this approach allows us to feel pretty confident, going into, whatever reports we're putting out in the space.
So when it comes to implementing ESG, obviously it's at the core of Highmark's mission. If you can give us a specific example, Saurabh, of what works, what you've seen works that other companies can learn from.
I'll give a couple examples, Scarlett. Thrive 18 is the project that I mentioned earlier, where we adopted 2,000 different households in an underserved community, and we said, let's invest in those communities and see if that actually bends the cost of healthcare. And we have empirical data to show that we actually reduce the cost of care by almost 10% by just providing them basic amenities, food, shelter, housing, some of those things. The other example I'll give is in a healthy food initiative in Highmark Health. We found that some of the underserved communities do not have access to healthy food, and therefore they were subject to different lifestyle diseases, diabetes that I mentioned. So we invested in those kind of initiatives, and we found clinical data that proves that once you support those initiatives, you'll actually see the cost of healthcare come down subsequently.
What about statutory requirements? Which of those do you find most effective in getting companies to move further along this process? Anne?
Yeah, so we don't really have any in the U.S. Just yet, and so
it's pending.
It's pending, but if you look at Europe, right? If you look at they're much further ahead of us in terms of their the European companies' ESG journey, and how the investment community looks at companies, and that's a function of the fact that they've got a framework in each country, and then if they're part of the EU. There's also a framework in the EU that makes it, consistent when you're looking, at companies in the EU. And so I think, that's one of the issues that we face here is just being able to look at one company and the next and understand if you're looking at the same data and also as a corporate, where you are in your journey and how you compare to others. Very hard to tell.
I'm glad you bring that up, looking at your data, looking at another company's data. Is there too much data or not enough data right now?
Yeah, so I'm a big fan of data, so I'm not going to say there never is too much data. We kind of live by the mantra of you can't manage what you can't measure, so data is good. It's about the consistency of the data and being able to understand, what the data is telling you. I think the other, issue that probably many companies face, as do we, is just, the collection of that data is a very, onerous process, and we're working on ways to, make that easier for ourselves and to add some, automation and, as part of our transformation journey. But it's just hard. It's hard. It's as hard as you might, have to wait for an email from a landlord about your emissions in a building that you're, that kind of data is hard to manage. But we need more, but we need it to be good, solid, consistent data that we can verify.
Saurabh, what about you?
If I could just add a couple of things. In healthcare industry, there is no dearth of data. There's plenty of data, a lot of data. And just to give you a magnitude of data that we deal with in Highmark Health, we have 2 petabytes of data in Highmark Health.
And I looked this up. Petabyte, 1 petabyte equals 1,000 terabytes.
That's right.
1 terabyte equals 1 trillion bytes.
Right.
So you have 2 petabytes worth of data.
So you can imagine how much data we have from all the claims experience that members are having at the hospitals. And the beauty of this, the good thing about this is we can actually harness the power of this data. We can do analysis with the help of Google and Verily and some of the technology companies and come up with predictive analytics. If someone is going to have diabetes or chronic heart failure or COPD 5 years down the road, and we can diagnose that upfront, and we can change their lifestyle or provide them some clinical help so they don't become a chronic patient later stage in their life, that's not only good for the member or the patient, but it's also going to reduce the cost of healthcare significantly. So that's what Highmark Health's mission and vision is in short, and that's how we are trying to harness the power.
So it's fairly easy to measure if you're doing your job well. We just look at the costs.
Absolutely.
What isn't working right now when it comes to an ESG strategy? You had told me provider transformation. What does that mean?
So COVID-19 has actually given a lot of challenges to the providers. I'm sure we are all reading about nursing shortage, inflation, looming recession, or we might be in recession already. And that's putting a lot of financial pressure on the providers. And providers have to transform the way they have done business in the past. They can't continue to run the same way. They have a lot of fixed assets. So that provides an opportunity for a company like Highmark Health to partner with these providers, provide value-based care, and essentially reduce the footprint of providers from all these bricks and mortar, all these fixed assets they have, and provide right healthcare at the right time, and maybe bring some of that healthcare upstream so that we don't have a chronically sick patient in a hospital setting. And that's what we are trying to do with our Living Health strategy.
We are approaching our final couple of minutes here, and as we wrap things up, what has surprised you the most about taking on this task of implementing an ESG strategy? Something that you didn't anticipate?
Yeah, if I could do two real quick ones.
Yes.
So one good one. On the great side, it was surprising to me just how passionate, how many people in the organization are about ESG.
They couldn't wait to get on board.
They couldn't wait to get on board. They couldn't wait to be part of it, and they really want to be part of the journey. So, really nice surprise, and for that reason, we have a lot of people that are helping us take it. On the other side, I think what surprised me, not as positive, is the fact that you have to work really hard as a corporate to tell your story in a clear way if you want it to be reflected in your ratings and your rankings. I kind of thought you just did those things and the good stuff happened, but if you can do them, but if you don't report them in the right way, they won't get picked up in the right way. So that was a surprise that we had to work through, and it took us some time to sort of strike the right balance with our reporting.
Maybe it means finding the numbers to tell your story best, even if they're not standardized across the board
exactly.
yet. Saurabh, what about you?
Yeah, some of the challenges are in a not-for-profit world, you do not have the investor pressure, the quarterly outcomes that you have to deliver to the street. And that could sometimes lead into lack of urgency, lack of sense of urgency, or perhaps lack of discipline.
Do you see that right now across the industry?
Not in Highmark Health, fortunately.
How about the rest of healthcare?
We do not have that in Highmark Health. I would say in the industry there is opportunities for improvement for sure.
Okay.
And that's the biggest challenge for healthcare. I may have mentioned this in a different forum. Healthcare cost in the United States is roughly $4 to $5 trillion. Our economy is about $20 trillion. Healthcare cost is growing at 6%. Economy is not growing at 6%. So you can do the math. It is unsustainable, and the cost curve has to bend down.
And hopefully ESG will be a path towards getting there.
Absolutely.
Although it may take time.
Yes.